Before we get started, I want to explain to you a short overview of what Master Trader Strategies is about and the way we educate here at Master Trader. First thing we do is define individual concepts of technical analysis. What's an individual concept? I'll explain that in a second. And we're going to define what's not to be used and why. We're going to define and understand each individual concept. So each lesson that we go over here at Master Trader will be about individual concepts, understanding how to use it, and then we're going to tell you how to interpret each individual concept. And once you become a student, our education is followed up with monthly coaching on an ongoing basis for life. Now, you have to practice what you learn, trading small, even on a paper account, and then developing consistency in following the approach. Part of our education is to teach you about changing market environments and how to adapt to them. So through experience and repetition of education, that is what leads to the mastery. Individual concepts. At Master Trader, we say price is king. Everything else is secondary. We don't use indicators. It's all about price analysis. We will do lessons on moving averages, which we use, but we do not use indicators. We look at prices in a candlestick format. Why? It's just easier to see the pictures. We are picture traders. That's the essence of what we do. We look at pictures. We look at those pictures within trends. Are they going up, down, and sideways? We look at them in multiple time frames, support and resistance. In some lessons we'll talk about volume, which is secondary. You will be part of the volume. In the moment of the trade, price will tell you when to act. We'll be talking about broader markets and their trend to give us a bias as to what's happening. Why? Because most stocks are going to be influenced on what's happening in the broader markets. Market internals and intermarket analysis combined with technical analysis is what we call the three-legged stool, or technical fundamentals. And position and money management. Without that, none of this matters, because if you don't have position and money management, you're not managing your business of trading. And just like any business, the trading business, maybe more than others, requires money management, because if you can't last in this game, you won't make it. Let's go. Hello traders, it's Greg from Master Trader. I hope you're enjoying your holiday day off. So last week we were expecting lower prices and we got it. Now, day before yesterday, we got that up day that really kind of put a cloud over the bias of looking lower. But on Thursday, we said, well, what should happen here is a bull sandwich should form, which is a continuation pattern. Now, I think I may have quoted it as a bear sandwich, as a bearish bias, but in reality, it's a bull sandwich. And Dan coined this probably 20 years ago, this pattern, which is a continuation pattern. As we look at this, I'm showing you the S&P futures. I'll look at it on SPX and SPY and the QQQ, and you'll see it much more clearly. But this encompasses the overnight data, and we're going to take a look at that because it's part of what we spoke about pre-market. If you're not aware, Dan and I do a pre-market review every day, starting at 9 o'clock until 9:30. We review the broader markets, different sectors, Bitcoin, gold, different commodities. So check that out each morning on YouTube. So what we had here was this move down, and we got a topping tail. It was rejected, and the idea was on this day that this could follow through to the downside. Well, it wasn't a little bit of support here. These overlapping opens and closes, or a support or a base in a smaller time frame. So it went up, and the intraday move was very impressive. And so I was like, okay, this bias that we had, the analysis of lower prices, this isn't following through today, obviously, and buyers stepped up throughout the day. And so the next day I said, well, and when we look at the intraday chart, you'll see why I said it. I said, I think what should happen now, based on the bigger picture, is that it's going to form this bull sandwich. And it's exactly what happened. So now we've got this big reversal day, reversing this big green day. And now, if it can push down through here, next week, it enters what we call the void. So just to show you the opposite of the bull sandwich, here is the bear sandwich. And you can see it's a continuation pattern. So it's one of the type of patterns that we use to get on board where we might normally be looking for a pullback type of scenario, entry point, or a larger base. It's a type of a failure pattern the way this is, where it was going sideways here, right? The trend was down. It started to stabilize. It looks like it's going down. It looks like it's going up. It starts going up and it gets nailed. And the breakout failure, and down it went. So here you had a momentum move up, and it tries to go up. It looks like it's going to go down. Market's, trying to shake everybody out, and you get the bear sandwich, big reversal, and so now up. So we're price pattern traders. At this point, our expectation is that this pattern is now going to follow through to the downside. Now, as we look at this on an intraday chart, and what I talked about pre-market before this happened was, you can go back and watch the videotape, was the fact that this was in a trading range. Right? It was in the area of the trading range. This is the bottom of the trading range. And pre-market, we talked about this upward shakeout pattern that occurred. Now, this was this little spike up, fake out that just got nailed right at the high there, and down it went. It was an attempt to hold, didn't happen, and went all the way down to the bottom of the trading range. Now, this played out ideally with our XPX credit spread that we do on Monday, Wednesday, and Friday pre-market. There's actually no charge for it. There are services out there that charge thousands of dollars for this analysis that we provide for you at no charge. And our credit spread was down here, down below this pivot, and we review open interest strikes and other support and stuff. So this played out very nicely. 100% profit at the end of the day. Was looking like maybe a little, shaky there at the end, but market closed and nowhere near hitting our spread strike. All right, so let's take a look at the cues just to show you this concept of the bull sandwich. So here's SPX, and you can see it much more clearly with the red bar, green bar up, and it's an impressive green bar that goes all the way up, and then an impressive down bar. Again, it's a continuation pattern. The other concept is, where's it going to continue to? There's a void. This could have a large move next week because there's nothing to stop it from going down. Forget fib levels, forget trader pivot lines, forget speed lines, forget extensions and all of that hocus pocus. There's nothing to the left here. Now, while there might be momentary stops along the way down for whatever reason, until this can form some type of a potent reversal, expectation is it's going lower. And now we look at other markets and we see a similar type of a pattern here in the NASDAQ 100. Big red bar. It went up. They were buying the tech like crazy. It's like, wow, this probably can go higher. And it's like, nope. Back down it went. Now, if it can clear this, it could have a real waterfall next week. And then we look across the board to other confirmation, and we see, if we go and look at, say, for example, Apple, which is, big part of this index, it's a big nasty bar with a void below. So we look at different markets. Are they aligned with each other? We look at different stocks that have huge influence on, in this case, multiple indices that can confirm our bias of lower prices, and this certainly does. And in our weekend review, in our letters, we'll go over different sector ETFs and look at semiconductors. We'll be looking at pharmaceuticals, retail, software, telecom, consumer staples, consumer discretionary, healthcare, materials, of course, tech, internet, and across the board to look at many different sectors for opportunities in those sectors, as well as stocks within those sectors, and of course the broader market. So I hope you liked this. If you did, subscribe to the channel. Of course, share the channel and give us a thumbs up, and we'll be talking next week.